Today, ladies and gentlemen, the man, the myth, the legend, the Bill Gates, who no longer even owns shares in his old company, Microsoft, but seems to like his 10% stake in waste management, which is what I want to break down today. So let's jump right in. Welcome back, ladies and gentlemen. I like my poking stick here, my appearing wand, to talk about today's waste management solutions, starting with the company Bill Gates currently owns and why he owns a share in this position. Well, we're going to find all of that out today as I break down the entire company. Now, Bill Gates has changed a lot. He currently holds 50% of his stake with Warren Buffett, which means now he owns more shares in Apple than he does in Microsoft, which I find mind-blowing because maybe he thought Microsoft was going to start tanking, but then all of a sudden gaming exploding, cloud computing started blowing up, and he hired the right management. I don't even think he has the right to hire people anymore, but either way, I enjoy my Microsoft shares nonetheless. I went over their books last night. I don't plan on selling it when a company's bringing in $50 billion a quarter, and it doesn't look like it's slowing down. So let's head on over to my computer, shall we? And let's take a look at waste management. Alrighty, ladies and gentlemen, if you don't know what I'm talking about, here we are, waste management. And before we break down this crazy stock and why everyone's hyped about it right now, we're going to read about why Bill Gates, the man who basically secretly sold off all of his Microsoft shares to be basically diversified in every other way possible. Don't know why he did that. Mind you, the other CEO or the other original CEO of Microsoft, one of the managing partners, still owns some shares in Microsoft. Good for him, because Microsoft's been on fire this year. But let's just read what Forbes has to say about this. There's a lot of BS in here, but we just want to scroll down. And waste management is a multi-faceted company with which, let me get through this. Oh my goodness, my speech impediment here today. Anyway, sorry guys. Waste management is a multifaceted company which services over 21 million customers across North America. The company is the U.S.'s largest provider of waste management and residential recycling services. The company has also been working in recent years to capture gas produced by landfill and turn it into energy. But we want to know why Bill Gates is holding this. Since the beginning of February, earnings per share estimate by analysts have been revised up to add the basically forward-looking one and FY2, providing for a grade A plus and a strong indication of their conviction for future growth. I want to know why Bill Gates is buying it, though. It's always a good plan, and we're going to break down the whole book, so just be patient here, all right, guys? It's always been a good plan to be a notable stock picker for some ideas. In this case, Bill Gates has entrusted portfolio manager Michael Larson to manage Bill Gates and Melinda Gates Foundation, so it really wasn't based on Bill Gates' own personal opinion, clearly, but I'm sure there was some advising over this position. We use the CrestCap platform to refine these ideas by examining their financial metrics, coming up with innovative and solid picks in our opinion. So what did we learn? Well, we found out that Bill Gates probably didn't make the opinion on buying this. So let's just talk about the stock. Let's break it down, go over everything real quick. Just a quick overview before we hop into any fundamentals. Obviously, we're looking at a company that didn't do much. It's been one of those stable long-term companies where you'd have it in your portfolio for stability over growth. And I mean, look, for the longest time, we had zero growth in this company. It was just flatlined. You'd probably do pretty well with the dividend, because if we take a quick peek at the dividend, we can see that it has increased over time. They've done quite a good job increasing it from 2011 from 34 cents to 2019 being up to 52 cents. But it's not like the best growing dividend. So essentially, you maybe go from a 1.8% to somewhere closer to a 3%, but you're not just quite there yet if you've been holding this since 2011. But still not bad. Don't get me wrong. Really healthy dividend growth. PE sits a little higher than I would enjoy seeing, but I don't know anything about waste management, so maybe this is a healthy PE for a company in this sector. But anyways, here's the company. Let's overview the website real quick just to see what's going on. And the first thing I always say about a company, how easy is their website to understand? And my God, I've scrolled through a lot of this already, and it is quite phantasmally simple. I like simple companies. People that overcomplicate their websites is a good understanding of how their business is being ran, in my personal opinion. But if we take a quick scroll through here, about us, always working for a sustainable tomorrow. Obviously, some BS sounds like the natural energy companies, where we're just trying to sustain the future. Not that that's bullshit, but I mean, this company deals with a lot of garbage, man. A lot of plastics, a lot of garbage. Going above and beyond, for us, good enough simply isn't good enough. It's why every day each of our 43,000 employees goes beyond more BS, just kind of pumping you up here. So there's not a lot going on in here, but let's just keep scrolling through. Obviously, we can take a look at kind of what waste management they deal with, which is residential waste, business waste, pickup, recycling, pickup, yard waste, and they also are starting to get involved in many other things. If we take a look at their waste services here, where's the sheet? Not this page. It's this page here, the WM 101. We take a look here. We can see the diversification between their business, basically what they're doing with their revenues, collection, landfill, transfer, recycling, and others, and we can see 54% of their entire revenue comes from garbage collection. So, I mean, obviously, I don't think there's going to be too many competitors coming up to collect the trash at the end of your driveway, even though you overlook that, which many of us do, because I've honestly never looked into this company before, and I'm glad that I've noticed it, because I think it's a fascinating company overall, maybe to even diversify your portfolio a bit. But looking at the growth factors, it's tough to say that there is growth factors for this, and we're going to get into that in a second. But collection and revenue mix basically comes from, the majority again comes from commercial, and residential makes up the vast majority of their collections, and basically where the revenues come from. But it's a well-diversified waste management company. So aside from that, I did take some time to look into their actual books, but they have 200 and something pages here of finances, which I completely understand considering how many trucks, employees, and all the stuff going on. So you can, I'll try and leave the link in the description below to all of their investor relation page that you guys can go over. But oh my God, to sit here and read through this right now would take quite some time, as they packed it all into almost 200 pages. And like I said, I scrolled through some of it looking, and I lost the page. I didn't even write it down. I was looking at their direct finances, and they do show you some of the costs. Obviously, like I'm just saying, in trucks, they do a good job at amortization. They do a really good job at basically doing their finances, man. I can see why Bill Gates' managers like this company so much, just for the sustainability, the competitive edge that they have. There's not really too many people that can step in. Take a deeper look at right now through my trading platform. And let's just take a look at Scotiabank's. A lot of these platforms are coming out with new ways to view stocks, which is nice, because I really like this new thing they added in, which is something that I watched a lot of YouTubers actually make. It actually shows you the earning per shares now versus the actual charting that they're having. And like I said, we can see, and I think it's just because the fear of a recession is coming, that these kind of non-discretionary, stocks that perform either way, no matter what, in a recessionary kind of period, they're always going to do well no matter what. It's kind of why I buy the tobacco stocks, because no matter what, I guarantee you people smoke whether they're broke or not. People do drugs whether they're broke or not. People need their garbage picked up whether they're broke or not. It's just a fact of life. So it's kind of neat to see what a rise it's been on. I mean, look at the charting here. Like, nothing's really changed in the fundamentals, but we can just see how much the charts exploded over the last year. And I don't know if that has to do with Bill Gates buying heavily into it. He doesn't really disclose when they're buying shares. But if we take a quick look at just the fundamentals here, just to see how good of a company this is. And I do not know this industry, so let me know in the comment section below if you know anything that I'm missing here. But earnings per share are extremely healthy at $4.33 per share, with the amount of shares outstanding of 424,000. So you can do the math on that guy. Market cap of about 50 billion. Not terrible at all. Dividend yield is basically like half, less than half of the overall earnings. Cash flow is really healthy. I wish it would show me the return on assets and equity. I always like seeing some companies they don't show on this one, because it's a Canadian platform. I'm not sure. I'd have to go into Yahoo Finance. But the return on assets and equity is something I pay a lot of attention to, because usually you want to see it in that 30% margin range, like Apple, Microsoft. Most companies that trade in that 30 to 50% range on the return on assets and equity are absolutely muy bien to me, because that just means they have a lot of room to dick around. So if they wanted to spend more money, they have the cash flow to cover it. Things need fixing, they got the cash flow to cover it. It's usually those companies that are a little farther stretched, where you're seeing like a 5-10% return on equity, always gets a little iffy, because if something did go wrong, you could really see their margins get eaten away quite fast, depending on how high intensive labor, how high intensive machinery or cost per goods they need to even make the jobs possible. You'll see that a lot in like a lot of the utilities and stuff tend to have a really high like debt ratio. They usually have a really high like employment ratio, but usually the return on assets and equities are so high that they can cover it pretty decently. But taking a look at the balance sheet here real quick, guys, let's take a look at the total current assets, or the total assets. We got to know about 22 billion. 22.6 billion. And then if we go into the total liabilities, we got 16.3. So this is the first thing I always do, which many of you guys know. I always take the total assets and minus them from the total liabilities and then compare it to the market cap, because that way you can see just for the stuff they have lying around, their assets, their, just what they have. It's quite an incredible thing. And this is assets, also include cash, whatever, all that extra stuff. But it basically shows you how much you're paying for the base value of the company versus what the market cap currently sits at. And as we can see, if we minus what's 22 minus 16 here, we're looking at roughly 6 billion, give or take. And what was the market cap on that? Don't quote me on that. I need a calculator to do this accurately. 6 or 7 billion. And we're looking at a market cap that currently trades at, where's that market cap? 48.6 billion. So you are paying quite a healthy premium for this guy. Quite a healthy premium today, I would say, versus their assets and liabilities. Just my personal opinion, but it's what I like to compare things to, because, like I said, you can really see what you're paying for this company for the underlying assets. Now it comes to how sustainable is the company, how competitive is the company, because that's where all these valuations come into play. So usually when you're paying such a high premium for a company like this, it's because they're not, it's like Visa, like you're really paying a premium for Visa. But I mean, is anybody really not going to stop using their Visas and start using Bitcoins? I don't think so, buddy. But just going over anything else we can see in here, just off a quick glance at the books. I like looking at the employees number. If you want to have a lot of fun too, you should look at the revenues and then divide it out between their employees. It's also fun to see basically, how much they're making off their employees, which I think was in the basic. Let me go back to the key statistics here. Should tell us that they have, 43,700 employees. So if you wanted to divide their earnings per share out versus employees, it'd be fun to see how much income they're actually making. And if we go to their income statement, guys, their total revenue is absolutely staggering. Clearly, their revenues have been doing very, very well. Not bad at all, actually, considering from 2015. Nothing crazy. I mean, we're not talking about a massive growth company here, but for the stability and the growth of the U.S., you're going to see this company, essentially, I would imagine, go up with the population rate. As population grows, waste management will grow with it. So it's kind of like owning real estate almost. Really discretionary and items. So this is where we're seeing how much it's going to cost for them to keep this revenue up, which isn't terrible at all compared to their actual overall revenue. This company is fairly well balanced. You'll notice that basically Bill Gates owns a lot of interesting companies, because the companies he buys, all of them pretty much have a crazy competitive edge. He owns CN Rail, which is a Canadian company. It's pretty hard to remake the rail system. He owns Delta is another one. He owns 50% of his portfolio is with Berkshire Hathaway. And Berkshire Hathaway, their biggest position is Apple. So I think it's hilarious to think that Bill Gates now owns more of Apple than he does Microsoft. And again, I don't think he owns any Microsoft anymore. Too bad for him, because I don't mind holding on to it. I think it's a little overvalued. I'm not going to lie. It's a little overvalued. And I've been debating on leveraging down, but I don't think I'm going to leverage down. Sorry, I'm not going to do any more line off tangents here. But let's get back into this really healthy income statement overall, guys. So that's going to give me a rating on this company right now of why is it up so much? That's my current question, because again, when we look at earnings versus revenue, guys, it's just, I can't find any real news on why it's exploding. Like, let's just do a quick Google search, shall we? Like, honestly, is because it's basically a recession-proof stock. Like I said, that's why we're seeing Procter & Gamble go up so much. Any of these recession kind of proof stocks have just been unreal. And honestly, Waste Management Inc. stock quote price. Do we see anything in the news? Waste Management stock moves down 11. It's like the only thing that they went down 0.11%. What you should know. What I should know is I think it's overvalued at this price. But Waste Management closed the most recent trading day at 114. Blah blah blah. Is that what actually the stock was trading at there? Is this accurate? What's going on here? Yeah, 114. So I wasn't even paying attention to the stock price. Always looking at that market cap instead. Coming in today's shares, the garbage and recycling hauler had lost 3.64% in the past month. In that time, the business service sector lost 2.73%, and the S&P 500 gained. So this looks like just an overall analyst report on it. But honestly, guys, let me know in the comment section below what you think, because I just can't get over the run that this company's had. And maybe, who knows, it's a good pick for your portfolio, but I can't see it being a good pick at this price. Mind you, I'm notorious for overpaying for stocks. So anyways, just my personal take. Did you enjoy this video? Maybe consider slapping a like down there, and consider subscribing if you learned something new today, guys. I really appreciate you all sticking around for my wonderful passive income journey with this crazy year that I've had. So stay cool, stay awesome. I look forward to chatting to you real soon.